Well, we've seen disappointing bank earnings, weak iron ore prices, and today we've seen a fresh all-time high for the Australian market. So hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 19th of November 2024, and just before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. So like I mentioned, we've seen the Australian market reach a fresh all-time high today. It actually shot very strongly past the previous all-time high. It got up to almost 84.50 at the high, and then we saw a pretty quick reversal, a drop of I think about 70 points by the close. We finished around 83.70, still an all-time high close, but just below the previous all-time high intraday level. So it was the highest ever close. We reached our highest ever intraday level, and we saw a pretty quick whip down from there, just right on the close. Regardless though, it is a pretty incredible move, unbelievable move. We've gone higher for 4 days in a row. It comes after some selling in US markets as well, and it comes almost entirely on the strength of the banks, as well as perhaps some of the technology stocks, some of the smaller sectors of the market. But really most of the points came from the banking space. These banks have reached new highs this week. They've set highs all throughout this year, and their move looks pretty incredible. If you looked at those banks, you'd be forgiven for thinking that they're enjoying the time of their lives. But to be honest, banking earnings this year are actually lower than last year. Dividends will be slightly higher, but that's because dividends have been lowered since the post-COVID period, or since the COVID period, and they're only starting to be increased, or the payout ratios are only going back to normal now. In some cases, the dividends were even lowered. To be honest, the move looks pretty ridiculous. We've seen, CBA, probably already the most expensive bank on earth, become out and out the most expensive bank on earth. You've seen a lot of the other banks increase, their own price to earnings ratios, their own fundamental valuations. In many cases, the dividends of these banks are well below the yields you can get on an Australian government bond. So there's no real equity risk premium for holding these banks either. To be honest though, I don't think it's really a story about the banks. If anything, it's actually a story about anything but the banks. I would suggest that it's a story that really has sort of two parts. One is that we've seen pretty large amounts of US government money printing. They're pumping, trillions of dollars into the economy each year. That's trillions of dollars of fresh liquidity, and that money has to flow somewhere. And then two, it's also the second part to that story is selling in the iron ore miners, selling in, BHP, Fortescue, and Rio. There's a lot of international money that is short selling those miners, and when you have all this liquidity coming from US government money printing, and then all this selling coming from Asian investment funds, Asian hedge funds, and things like that, other parts of our market need to make up the difference between, following global bullish equity trends and the iron ore miners selling down. And the banks, being the next biggest part of our market, or being the biggest part of our market, essentially fill that gap. And so as those miners are sold down, but our market keeps rising, those banks keep rising. It's an interesting thing. It sort of goes to show just, I guess, how unbalanced markets are at the moment, but it doesn't mean that's going to change anytime soon. The next thing I wanted to touch on this week is the inflation battle. We're seeing continued strength in economic data, and that includes inflation data. In the US, they've started to cut interest rates, and today we had our RBA meeting minutes. Some people say that the minutes were a little bit dovish. I'm not too sure. They basically said they do see a few rate cuts next year and in 2026, but they also said that they don't see inflation returning to the target range until 2026. The market was always pricing in rate cuts next year. In fact, they've been pricing in rate cuts, this year, and now they've had to push them out to next year. So I'm not sure I see that statement as particularly dovish, and indeed, Australian government bond yields didn't fall after the statement was released. In the US, they have started to see rate cuts, but the likelihood of future rate cuts is getting less and less. And indeed, we actually had Jerome Powell come out last week and basically say that the path forward on interest rate cuts is not as certain as it was, basically. markets were almost guaranteed, or they're almost 100% predicting a rate cut in December. Now it's pretty 50-50 whether we see another US rate cut in December. I think the big risk for global markets from here is a pivot in the rate cut narrative. If we see inflation resurge, and that could occur if Trump engages more tariffs or cuts the company tax rate. If we do see a pivot on these rate cuts, on the trend of interest rates, that will probably, I think, disrupt the global bullish movement we're currently seeing. It could also trigger a bit of revision as to whether the market's willing to let the US government increase debt as much as it is, but that's sort of a discussion for a later time. Finally, this week we've also got Nvidia reporting. Probably the most important global share at the moment, Nvidia. It was the biggest. I think it's now back to number 2, but biggest listed company on earth essentially, and it's been the most bullish company of the large companies for the past year. It's added the most points to global markets. It's based all around the AI story, obviously. They make the GPUs, the computer chips that these AI models use to crunch their algorithms, and the report here is seen as a sort of bellwether as to how positive the impact of AI will be on company earnings moving forwards. We have seen a few spanners in the works for Nvidia. One of their biggest customers turns out is a bit of a scam, bit of a fraud. There's also talk that we're going to start seeing a bit of a drop in expenditure from some of their other customers. We'll have to wait and see if that's the case. But Nvidia's right back to their all-time high. So if this report is better than expected and we see fresh highs, that's likely to trigger another sort of leg higher in global markets. If it's a disappointing report and worse than expected, I do think there's a lot of downside room here. If you go back and look at Nvidia's history, they've had big push-ups before, nothing like this, but big jumps before, and they've had big drops before as well. It's not a stock that's sort of traded in a low volatility manner. It's had big moves both higher and lower. Indeed, I think last earnings report it dropped about 7% on the result. Global markets, they are extremely strong, but when they are so strong, so overbought almost, any little thing can sort of trigger a bit of concern. If you're a share investor, you've watched this sort of unbelievable bullish move, you have to start to think about taking profits when you see, causes for concern or signs for concern. And that could be something that, we see around Nvidia's report. So that's going to be on Wednesday night Australian time. We'll react to the report on Thursday morning. It will come after the US market closes for their Wednesday session though. So let's have a look at the charts for this week, guys. So we'll have a look. This is the XJO. And at the start I mentioned we had a pretty crazy move higher today. We jumped all the way up to about 84.50, and then we pulled back, 70 points, 80 points almost, to about 83.75, right around the previous all-time high. Really a crazy move, unbelievable move, to have such a strong push higher and then such a strong pullback right on the close. It does leave us right around, the edge of the Bollinger Band though, and it could be that we were just pushing back towards where the Bollinger Band was. It could be that we're actually holding the previous high as a bit of a resistance level. We're going to have to wait and see, what the case is tomorrow, whether we pull back down from here or whether we sort of push back through that 8400 level. If we do pull back down, I'd be looking around sort of 8270 as the downside target, roughly the previous peak, roughly the previous all-time high, or one of the previous all-time highs. And, given the volatility we're seeing, I don't think it'll take much to get us back down there. If we push through, 84.50 will be the level to beat, today's intraday high. And whether or not that's the case, it's probably going to come down to US markets. Unless they see a rise tonight, I actually think we'll be trading inside and below 8400 tomorrow. So let's have a quick look at the US chart for this week. And this is the US S&P 500. We can see they actually had their own pullback over the past week, back towards their previous all-time high at roughly 58.80. They held that 58.80 as support overnight, and we'll need to see if they bounce off this level or not tomorrow. If they do, I think we'll see a move back towards their own all-time high, right around 6,000 index points. Although whether they get there or hold there or break through or fall from there will probably depend on Nvidia's report tomorrow night, on Wednesday night. If they break below that 58.80 level, I think we're going to see a move back towards this trend line. Currently, that would intersect right around 5800, and there is a bit of a support resistance line at 5800 anyway. So yeah, they're at a bit of a decision level as well. Overnight, they did have a little bit of a gain, but it wasn't the most convincing. And it could be that their market now waits for that Nvidia report. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe. If you didn't, click them anyway, and we'll see you guys next time.